Garrett, it's great to have you. I'd love to get your take just generally on whether or not you see sort of a big three happening at once, or do they go after one on a pattern negotiation? What's your view?
Yeah, thanks for having me. That's the big question right now. It's unclear if the UAW workers are just going to strike at one company, most likely being Stellantis, because they appear to be the target company this round of negotiations, or whether it will be all three, the Detroit three, Stellantis, GM, and Ford. So, that's the big uncertainty. But we think the consensus is that there will be a strike. We think this strike could last several weeks, perhaps even stretching for months, just given that the two sides appear to be very far apart, much further apart than last time, 4 years ago, when there was a 40-day strike. This appears to be much more of a divide this time around.
Right. You think the street's more worried about the actual interruption of production, or the result that would be in the form of higher wages or union measures, work measures that maybe the company would not like?
In the near term, of course, we think the street's more concerned about the impact of production. Now, inventories have finally recovered to levels that are close to normal, but after a very difficult period of the last 2 years when inventories were at record levels because of supply chain issues and semiconductor shortages, they finally recovered, and prices have kind of evened out. But if there's a strike, we think you could be looking at another increase in prices. And then longer term, just the magnitude of the wage increases. The UAW is pushing for a wage increase of more than 40%. Now, that's going to really impact the bottom line of those three companies, most so General Motors, in our opinion.
Yeah, why do you say that? I was going to ask why you say GM is likely the biggest loser in the event of a strike.
It's given their percentage of UAW workers. In 2019, when there was a 40-day strike, it negatively impacted GM's earnings by about $3.6 billion for the year, or $1.89 a share. And so they just have more exposure. They're not as diversified in terms of their production base and profitability base as either Ford or Stellantis. And so it really would impact them the most.
What about this posture from the head of the UAW, the president, Shawn Fain? We followed some of his comments. Pretty aggressive, pretty confrontational, calls this a defining moment. Where do you think that, is it personality driven? Is it the labor environment that we're seeing, the fact that they're emboldened by other strikes in other areas like what we saw with UPS and Teamsters, or something specific to the automakers?
It's a combination of all these things. But if you look back 4 years ago when the last deal was struck, that was just months before COVID. And, I think the COVID experience, the decline in real wages for workers, it is a lot of, what's behind this. But Fain was just elected to that position less than 6 months ago. And so he's really determined to make his mark in this first round of negotiations as head of the UAW. And so, all signs point to this potentially being a prolonged strike. They've also increased strike pay by nearly double. So striking UAW workers will be getting $500 a week in strike pay. 4 years ago, they were only getting $275 a week. And so that really, in our view, prolongs the potential for a long strike.
Hey, finally, Garrett, on Tesla, you point out a net winner, although it's had some trouble reasserting itself over the 50-day, and there's a lot of commentary this week or so talking about how sentiment might be at risk given the pricing pattern and what might happen to margins. Your thoughts on that?
A lot of concerns still regarding margins, and Tesla really kicked off this pricing war in EVs in early January when they announced their first round of price cuts. Since then, there have been several price cuts announced, but we think given the sell-off in the stock over the last 6 weeks or so, we do view it as a buying opportunity. Tesla, of course, is 100% non-union, so they're being viewed as a winner in the event of a prolonged UAW strike.